Hi everyone, this is Paul Lange from DTS, and I want to introduce you to what you're about to watch. This is an hour-long event that was presented live to the free members at Discipline Trading Strategies. This is called When Charts Whisper and When They Scream, and I'm going to go through several charts and give three categories of things. One are charts that scream but are bad. These are the cookie cutter patterns that a lot of traders fall for. Next, charts that scream that are good, and these are the nice patterns that actually work. And then a category of sleepers, which are my favorites. These are the ones that I like the best that normally don't stick out to the average trader. If you enjoy this, check out the many full videos of educational events, articles, and Trade of the Week videos you can get access to at the DTS Free Stuff page. For now, sit back and enjoy. Good evening, everybody. How's the sound out there? It's a couple of seconds after 5 on Wednesday, the 14th of January, midweek. Welcome to tonight, the first DTS educational event of 2026 on January 14th. Hope everybody had a good time off if you haven't been with me in the room or if you're not a seminar person. Those of you that are free members, hope you had a good time off. I haven't seen you since last year. Let's get going because as usual, I probably will fill up the whole hour. Tonight's topic is when charts whisper and when they scream. A few introductory comments to this. Number one, I think this is going to be, I'm not sure the audience for this one. This may be a little subtle or vague if you're just a member and haven't been trained. I'm not trying to be cute. I think the concepts got a little bit advanced as I started to get into this. There are things that, you have to kind of be trained for. Not things I can train you on tonight, but things you have to be trained for a little bit. But I think you'll love it and get a good idea out of the whole general topic. So I think there's going to be different levels that you could see this at. Just a general view of, hey, here's whisper, here's scream, what it means, goods and bads, that kind of thing. And there's maybe more detailed levels some of you may pick up on, and some concluding comments about scanning and how you look for some of these things. Discussion points: the difference between interesting price action and actionable price action. It's one of the more important things to me is that you see people all the time with watch lists and charts and all the piles of woulda, coulda, shoulda trades that they woulda, coulda, shoulda done and didn't do. And all that matters is what you actually do. All the time you hear about, oh, the watch list I had, and oh, I was watching the stock, and all these things did this and that I was going to get, and I almost did, and all these things. And the reason for the indecision oftentimes is because you're just not really sure what to do. And naturally, everybody misses stuff, if you want to call it that. I have things that I absolutely want to do, and I just can't find an entry or something happens like that. But I'm usually kind of understanding. It's not like every chart I have up is, oh, how did I miss all these? Why the best trades rarely announce themselves, and the worst ones often do. The whisper trades I often call sleepers, and they are one reason you cannot effectively computer scan for the basic setups. I'm going to talk about that at the end. Charts don't often speak loudly. Often the highest odds trades come from subtle tells, and the MTF means multiple time frame structure, not dramatic breakouts. In this session, we'll look at examples of both and how knowing the difference can change outcomes. As we get to the charts in this, I have kind of a 4-pack of charts. And when I did those before for you, I know there's some mixed comments because they're a little smaller, so a little harder to see some of the detail. But I couldn't put one chart because the whole point of this exercise is just showing what it means to whisper when to scream. And that answer doesn't come from one chart. So you'll see as we get into this exactly what I mean. Whisper and scream. I don't use these terms a lot. I kind of made them up for this presentation exactly. The term I use a lot is a sleeper trade, which is one that's kind of a whisper trade. I just wanted to use whisper and scream on here. Whisper trades are typically the result of the synergy of all time frames, which often makes the time frame you are using for entry not so impressive. So sometimes, and this is very true in the room a lot of times, I even said it in a few emails about the room, that if you're new to the room and you watch me start trading, you probably won't have a clue what I'm doing. Because, right, Eric? I see Eric's name there last. Because a lot of things I do are not just the typical things that most traders are trained to or look to do. So a lot of times when you're getting into something, it's because the structure is all there already and everything's set and this is the area. And now it's just kind of you're looking around saying, okay, what do I need to say go? I'm here at the starting gate. Everybody's in line. The crowd's all here. The guy with the starting gun's ready to go. I can just go, other than cheating, I can just go. There's nothing to wait for anymore. Sometimes I call these sleepers for fun. And usually I also call it a moment time in DTS, a moment in time. And that's kind of finding that birthplace of the move, so to speak. And oftentimes that birthplace is hidden. It's easy to go back on any chart, even take a weekly chart that ran for 6 weeks, and it's easily to go back and see. You can actually pick out the 5 minute move, if you will, on a certain day that actually began the move, so to speak. And that is, in essence, the ultimate goal of trading to me. Not that you're going to really do that every time because that's too hard, but trying to get to that level of trading where you are, really finding the beginning of a move a couple time frames beneath where you're actually trading. And naturally, doing this without knowing what you're doing would be deadly. You'd just be stopping out of everything if you're just taking a guess what to do. But when you really systematically boil it down, start at the higher time frames, boil it down to where you're supposed to be, sometimes you'll get great entries. Now, not every chart will give you that entry you're looking for. Every chart will, if you look backwards, every chart will have a moment in time, that was the birthplace, if you will, of a move. But looking in hindsight is easy. But in real time, they're not always doable type things. You have to look for the ones that are. These whisper charts are safe for wannabe traders. Now, forgive the word wannabe. I just want to put in here, kind of an untrained type person. Maybe you're doing okay, maybe you're struggling, but the whisper charts are actually not a danger to wannabe traders because they're never on their radar. In other words, these whisper charts, most traders wouldn't see. They wouldn't be reacting to them. So there's no danger in these. The only danger would be is trying to find these if you don't know what you're looking for. Now, the other side of the equation is the screaming charts. These are patterns of two types. They are those more obvious patterns that traders, both pro and wannabes, look for. The big buy setups, as we all call it, and the big breakouts. By the way, I do use a couple of terms separately. When I put like breakout or buy setup in air quotes with just the term breakout or buy setup, it has nothing to do with how I look at a chart. It's just kind of what the world calls, what I think the world calls a breakout or buy setup. When I say a DTS breakout play, that is specific, meaning what I teach, what we do, all the detail involved. Screamers are more often fake outs, patterns that seem obvious, but that is because they are already overdone at that point and profit taking usually begins. So when it's most obvious to a lot of traders is when something has just, had this big move already, and then it's, wow, there's an obvious breakout. But the problem is that a lot of times that to make the move that obvious, so much movement has occurred that the next move gets sold. And this is where a lot of traders get in trouble because they look for those, what they would call safe patterns that are clearly being bought. But the problem is they have already been bought. And now you're in this mix of profit taking and maybe a move higher sometime in the future. Does that make sense so far, everyone? I have one more line to go. Does that make sense so far? Because if you get it, that kind of means that these patterns, the screaming charts, are usually dangerous for wannabe traders because it's often hard to tell quality from garbage. So you get this, obviously, some really nice screaming charts are screaming charts that should be bought. They're just beautiful setups. But there is kind of a fine line difference between what a really great setup is and what a garbage setup is that maybe looks kind of okay to the untrained eye. And these are the ones that are dangerous. These include all the chart patterns that people oftentimes look to as just those generic patterns, the head and shoulder stuff and all the type of stuff that you can always look back in hindsight and find a trade that worked and said, oh yeah, there's why it worked. But the truth of it is they really don't work going forward. So this is going to be a really technical presentation, and we're going to start off right with some charts here. And I'll be asking you some questions. And each one of these charts is either going to be a sleeper, it's going to be called, not on the first slide, or a screamer good or a screamer bad. So I think it'll be a pretty educational event. Let me clarify what I was trying to say there a moment ago too, is that a lot of the bad screaming charts are what I like to call cookie cutter patterns a lot of times. They're just these generic things that kind of look good structurally, but they really don't end up making money because they're just too broad, too general, too not functioning. So here we go. PL, this is a stock PL. Now this is what you're going to be looking at for charts. This is a 4-pack of charts. It's a daily chart. Now the 4 are going to be different on different charts because they were kind of different trades. You can take a look what they all are. If you can read it, you can back up the chart behind there. I just put them on here so you can see it better. So there's a daily chart, a 60-minute chart, a 5-minute chart, a 1-minute chart. This is a day trading concept. So it's a day trade only. These are the pertinent time frames for day trading for me. PL long, and the question here is, how do we like this breakout on the 5 and 60-minute chart? You don't have to give me numbers or grades, but maybe just give me some comments. Do we like this? Is this something that you think is going to be a screaming good? It's not a sleeper. If you understand what I mean by sleeper and screamer, this is definitely a screamer. So is a screamer good or a screamer bad? Is this something that you would do? Do you think it's a quality setup as a quote unquote breakout? If we really like it, then we could call it a DTS breakout play, but that's the question. Do we like this or not? And any comments? Now, don't all type at once because that could crash the room or something maybe. Looks good. Okay. Say no, what do you not like about it, Carla? Because I appreciate the no. If you like it, you may want to, sometimes it's easier to pick out something you don't like, right? Rather than list things you do like. But what's the negative about this? And as we go through and look at these, you're going to get the sense that there is just a whole lot of little information that you add up when you're looking at a chart. There is no one determinative thing. Okay, quick day trade could be okay, VRL. All right, looks good. No, a quick day trade could be okay. Wouldn't think to buy. Not to look at this for 2 months. Is it day trade? Well, Vero, this is a day trade. So I mean, you can't say it would be 2 months because next 2 days it could pull back like crazy, and could be in a spot where you would like. No, not a 20 and a 60. Looks like 3-leg move up already. I want to retrace before buy. Okay. So again, these are some good comments and some generic comments. No follow through on the 60. No follow through on the 60. Well, we're talking about the next day we're going to trade above. Oh, you think it's not going to follow through? We're going to trade above this base. The arrows are missing here. We're going to trade, in other words, we're going to trade above this base. If I'm not clear, I'm sorry. We're going to trade above this base, which is trading above this base. And that's what the daily looks like, and this is the 1-minute chart's not really relevant here, but I don't know if URL. I got kind of messed up on that. I mean, whether that's the last day or not isn't relevant. Here's all you need to see on the daily. Whether there's a day missing or not is not terribly relevant to me. There's nothing big about the last day. I'm not sure if that day is the last day or not. I think it is. Yes. That actually. Well, okay. Yeah, that's right. So, all right, let's go on. So, what do we like about this? I happen to love this. I think it is great. Let's go to the next slide there. Obvious screamer to me. While the 60, the daily here is a power trend. In other words, this is very, very, very tight pattern, and that's okay. As long as the 60, it launched from the 20 and then it was sideways, and yeah, I don't want it much above the 20, but you have this 5-minute consolidation, and as long as we get confirmation over this, however, there was a big caveat to this, and that is something VRL very astutely mentioned, and that was that this is because the 60 is up here, like Steve mentioned, I think it was, that there is a good chance that the morning pop is going to be it. So, but as a day trade to me, this is a very high odds thing, taking it from here to here. This is just the 1-minute chart showing the same move. This also happened to give a fantastic entry because it gapped up above the base and then pulled back, and it took it somewhere coming out of here. This was not only just a chart. These are a mixture of things today. This is not only a chart, but just to prove to you, this is not just an afterthought of, oh, gee, this was a trade that I did. It was on, well, whatever day it says here, on the 8th, right? That was Friday, I think. Thursday. So this is on the 8th, PL. And note that those of you in the room know, I normally like to kind of hang on to stuff, right? Everyone kind of like to hang on for hour, 2 hours, half day, all day. Today I held that stupid clove all day long. I was out of this whole thing in 10 minutes, right? Because I knew, and yes, can you learn that from the chart? Absolutely, you can learn that from the chart. This is a nice coming together of time frames. This much consolidation in a power trend like this, I think it's a gotta do. I think a lot of your comments were nice comments, were good comments. It is up there a little bit on the hourly, and that's why it's not a long-term entry, but as a day trade, that's why the 5-minute chart here is so key. And just to put it in perspective for you, this is kind of one of these, when I saw this scanning the night before, that's one of those heart skips a beat, think about it at night, get up in the morning waiting for it, can't wait to do it type of things. This is hot list material, and it was done second minute of the day. So that's a screamer and a good screamer. That's one that the whole world would take notice of. And in this case, I think it's a pretty good setup. Again, just for that morning pop. It popped for what? For 30 minutes. I don't think I got quite all of it, but got enough of it. All right, I'm going to move on. Let me know if you have any questions. So here's the next one. Question is a daily buy setup. Now let me make sure we're precise enough here. Here's the daily chart, and this next day we're going to trade well above this red bar. And on the hourly chart, there's the prior day's high, so we're going to trade well above there because that's the prior bar on the daily. And that means on the 15-minute chart, we're going to be opening up in here somewhere above the prior day's high with that daily chart. And the weekly chart, again, I kind of cut off the last week so you don't see what happens here. But that's the weekly chart going into a day or two before the trade, all right? So same question. How do we like this quote-unquote daily buy setup? Like it a lot? Would you do this? What do we think about it? And if you want to, without even giving any specific thumbs up or down, just throw out some comments. What's good or bad about this? Because there's some good and bad about this one. You might want to also take a guess. Is this a trade I did? Or is this an example of something good? Or is it an example of something bad? What do we have? Oops, all of a sudden you guys started. Every time I look away, you type, and then it goes right off the screen for me. Buy in a downtrend, not for me. A downtrend on the, well, what time frame are you in a downtrend? The daily chart's not in a downtrend, Carmen. I mean, it depends kind of how you read charts, but the daily chart is not in a downtrend. It's actually not in an uptrend. Trap shorts is bullish. Okay. Yeah, something we should talk about too is the question, I guess, would be for both maybe a day trade and or maybe a swing trade. I think you would wait for a little red, then buy. Okay, so after, okay, so let it trade above the red bar, wait for some red, and then buy. Okay. Well, you know what the question asks is this a daily buy setup? So excuse me. This is asking, is this like a swing trade? Is this something you would hold a few days? The daily chart, is that a daily buy setup? So we're not really interested if there's any day trading money for an hour or something. We're asking, is this a daily buy setup? Is that the launch on the daily chart? These are some great charts here to work with because I think they bring out some good points. Is that a launch on the daily chart? There are two huge points on here. People typing, let me just give them a minute. There is really an interesting point on here that at least some seminar people should pick up on. This is not a chart. This is not a good daily chart. Now there are some attributes to it that are good, and unfortunately I don't think anybody mentioned some of the better attributes. Let me get my blue marker here. One of the good attributes is that this is actually a decent support area because you're sitting on a very strong minor support area. This gap from here to here produces a big support area through here. Retesting that generally be considered somewhat of a support area. Probably should get some kind of bounce. That's probably why it gapped up that next day, to be honest with you. It's probably the biggest reason for it. There may have been some news event, whatever, I don't know. But this is not at all a quality chart that I want to do, and there's two big reasons for it. Not a DTS buy setup in the daily chart. Looks like a screaming buy to many. It has some merits. Can you list them? I just listed them for you. But here are the two problems with it. Number one is that if you're swing trading, of course you look at the weekly chart, but even as a day trader, I don't keep a weekly chart permanently on there, but sometimes even as a day trader, and this isn't a day trade, it's an offshoot question, but even as a day trader, why would you ever have the weekly chart up as a day trader? It's a question that has been addressed in the seminar program. Why would you ever have the weekly chart? Because I do, and I use it, and this is actually a good example. And certainly, if you're considering this as a swing trade, the weekly chart is of paramount importance. Not Netflix importance, but paramount importance. Free market structure. No gapping up to the previous contributor. Okay. Carlo, I think you hit one of the two big things I was going to mention. Time frame above not confirming. At minor support on daily good VRL. Yeah, it's one of the positives about it, yes. Not a daily uptrend. Is that a 5-minute chart? No, they're all marked clearly what the charts are, Joe. See those big, huge black letters in the middle of the chart? That's indicating what the charts are. Looking to see what you. Okay. Here's the two big issues. Is that the weekly chart, even as a day trader, the question, what is the weekly chart ever used for, even if you're day trading? Well, sometimes you need to clarify the daily chart. In other words, sometimes you just can't figure out what the daily chart is telling you, right? But when you look at the weekly chart here, it becomes more and more obvious what it's telling you, and that is that we are in a weekly downtrend, or at this point, it's actually what we call a weekly stage one. The weekly stage one coming off of these highs, that means that the pattern is not one where the daily chart should be expected to hold in the middle of the weekly pattern, right in here. Do you see that, everybody? The pattern that should be expected is just simply top to bottom. So the expectation is back down to here. So you have no right based on the higher time frame to be coming in here and expecting that to be the end of the move unless there's a lot of other stuff going on. But here's the other thing that kills this, whether you're looking as a swing trade or a day trade, and maybe Carlo mentioned this. I'm not sure what he meant by that, but do you see where it said we gapped up to? Do you notice that we cleared this red bar, but we did not clear the hourly pivot? Do you see that? We're gapping to here, cleared that bar, that's the high of the bar, but this hourly pivot is still here. So this is one of these, more rare things where you think the daily chart is the one in charge because you cleared a red bar, but if the transition between days leaves no break and you don't clear the hourly pivot, you didn't clear anything. Does that make sense, everybody? And there's another one too. You can just look at this daily chart and say, you know what? This is a mess. This is a mess, right? See, we get our odds from all of a sudden, things have been looking bullish, and then there's a little minor bearishness, and all of a sudden things flip and we go bullish again, and people are caught off guard. We got some people trapped, and things are happening. This is a mess in that we've been into new depths. The new depths had a gap up, a big rally, and other collapse. It's just too sloppy out there to try and pick reversal points on a daily chart like that. So this is just a question somebody brought up to me, and I thought, hey, great question, good to talk about. So I put this as a screamer bad, and when that's gapped up that day, there were people that thought this was the buy setup of all times, and it just crashed for 2 days. And before I saw it crash, I did not like it. Keep it on a back burner screen, take a look at it. Maybe if it would have gapped up, there's a different scenario here. If it would have gapped up, taken out that day's high for real, the hourly high, not just the day's high, consolidated all day, later that day, maybe the next day, maybe you could do something with this. But just on the rip like that, no good. Bad screamer. Next one. How do we like the 15 and 60 minute quote unquote breakout? So here we're talking about we are going to trade, see how the arrow's pointing, we are going to trade above that base. We are going to trade above that base. This is a 60-minute chart, 15-minute chart. Oh, I did a little boo-boo there. I did not cover up the 5-minute chart on this slide. Whoops. So that's going to shorten this question answer. Even still, regardless, at first I was going to do this and just show all the slides and just talk about them, but I figured I'd rather let you guys take a peek at some of these. What do we think about this as a breakout play? What do we think about this as a breakout play? And this is QUBT, by the way. What do we think about this as a breakout play? I wouldn't call this similar because this is a very calm, subdued daily chart. I think the daily here is similar to probably weekly sort of, where you have this downtrending stage one, it's starting to hold now type of thing. We're going sideways now like this, yeah. Close to resistance, not much room, okay. So you're saying that, we'd be clearing that. Well, that pop VRL is right there. That's that. So you were clearing kind of, I think you had a nice run there to clear. I don't think target's the issue. And even if it was, it's probably a good move to that area there, like for a day trade to your 200, okay. You don't mean to the 200, you mean to this prior high over here, which coincidentally is around the 200. Yeah, so yeah, this one is, and again, you guys can have your own opinions of things if you don't like how I look at charts, but I think this is one of the biggest mistakes people make. This is a huge no-no. Steve. This is a huge no-no. The reasons are very clear. Just looking at this chart, here's a good rule for you. You never, ever take a breakout or call it a breakout above that wide of a base. You just never do that, ever, because there's no odds in it whatsoever. I don't care if the rest of the chart is so confusing you don't even know which direction this is going, that's fine. You don't need to know the direction. But either buy this or sell that. You don't buy over the top. Is that clear, everybody? That's just like one of the basic things I can teach you if you're new or learning or whatever it is. You never do that. And this is one of the most common things. Again, me sitting in my chair and getting people all the time emailing me charts and wanting to talk to me, this is one of the most common trades people want to do. It's just this big, wide area. And even if you're right, where's your stop on this? The other side of the base? I mean, it's hard to make money like that. You got to have a home run just to make a little bit of money. You can't do it that way. So this is a big no-no. And the only way that I would ever consider doing that, if the base was questionably wide, in this case here, no width of base is acceptable because this is not what you would even call a breakout. Because when you go to the higher time frame, we're not in an uptrend. Now, for you seminar people, there's a whole hour-long presentation, the part about the time frame 2 above, where I talk about stuff like this. And if you explained it to me properly, I could justify this daily chart using an hourly breakout if it was truly a breakout. But this to me is just a wide mess. It's something that always gets you in trouble, and it makes it extremely prone to failure. And that's just what happens. We get this pop. It happens for, maybe as a day trade you made some money. You grab 20 cents in there as it popped above that, but that's not a way to make money because I actually think that was an exceptionally large breakout for that move. Because the problem is you're coming from all the way down here. So you're running from the bottom of the space, you run to the top, and then you expect the stock to break above and go somewhere when it has not done that in the past. It's going to stick to sideways. So this one not only failed in the breakout, but it continued to fail. Well, it pulled all the way back down to the bottom of the base. More on this one later. I had another comment here, but yeah. Well, yeah, the other comment is that you maybe don't even have to be seminar to answer this question. What stage are we in on the daily chart? VRL, could you give me a 5-letter word that would answer the question? When are you allowed to buy the break above a stage 1? Never, because there is no such thing as a breakout above a stage 1. It is, matter of fact, you can actually short a stage 1 breakout if it's the first time it's trying it. I do that sometimes. It works fairly well. It would have worked here. It would have been a home run trade. So I put this as a screamer because this to me is one of the more common patterns I see people trying to do and ask me why it doesn't work. This to me is a screamer, meaning, hey, the whole world's looking at this, but this is a bad trade. It's one of those things that makes people lose. K-view long on a 60-minute quote-unquote buy setup. We're talking about that right there as a day trade. If we're on a 60-minute chart buy setup, it's a day trade. Half day, all day, whatever you want. What do we think? Let me put a little break here so we're not thinking never as part of this chart. All right. What do we think about K-view? Get to the previous high, okay. All right, good. I like this one too. Now, I have to tell you, in all fairness, this one here is not a trade I did. This is on my hot list. I was going to do it. I did something else, whatever it was. I do like this. This is what I call a sleeper. I mean, to me, you look at this daily chart, this is not something somebody would pick up on and just kind of say, oh, most traders, a lot of you in here are experienced and more advanced and that type of thing, but the typical trader is never going to look at this chart and think of it as a long because they're not seeing all the nuances in here. They're not seeing this big red bar that consolidated at support and then blasted off the next day. That first pullback after that is a buy, period. It technically is in an hourly uptrend. What about the daily chart? What does the daily chart tell you here? Bullish, bearish, neutral? As of the time we're looking to take this trade, possibly at the end of this day right there. What's the daily chart telling you? Yeah, well, I don't like the concept of calling something a J-hook pattern because it puts things in a cookie cutter, all by itself thing, which doesn't work. You can't look at 3 candles and determine what's going on. I think that's a huge issue. No little cluster of candle. I like the book of Japanese candlestick charting techniques, but in conjunction with understanding price action and how the whole price cycle works. But just in a vacuum, you can't look at 3 candles and determine anything from it at all. Yeah, well, see, you're all kind of saying some subjective things, and they're all true. But what really matters here is, number one, is that this stock gapped up back here and is held like a rock. That's impressive. I mean, that means that this thing is getting buying. It held these higher levels. Now the question comes, all right, now we have kind of a red bar next day that broke below these higher levels. We're still above this level. And what's the reaction going to be to that? Is that going to start selling? In other words, we open up the door to the bears to say, all right, we've been in this tight base. We went below the first level, but we have other levels beneath us. What's the reaction? And the reaction was that on the day that we really hit the low, we immediately reversed and came up, and then boom, just shot higher. So the reaction to new lows is nothing but buying. So the daily chart is anywhere from neutral to bullish. It's not bearish at that point because there was no follow through on what could be perceived as a potential breakdown. All right. Yeah, and this would be, this would just be played like I think Carlos said to the prior. Well, actually, this day it ran to the prior high, and that was it. And that was it. Now, again, that was not a trade I actually did. It was on my hot list. It was an intended trade. I did something else, whatever happened that day. I don't know. But I thought it was just a good example to put in here as well. All right, next. 60-minute quote unquote buy setup. How do we like this 60-minute chart to go long on the pullback? So we're talking about the next day. This thing's going to pull back to this general. It's actually going to go. It's going to go a little below these bars here. There's the 5-minute chart. It's going to go right to there. So the next day, the stock pulls back, actually drops kind of hard. How do we like going long in here? It's calling it a how do we like going long the 60-minute chart. I didn't put a name on it. When we reach the low of that long green candle before considering. Okay. I'll wait to get some more comments, then I'll comment on that. Great, love it. Oh, you're just so easy. You just love everything, Eric. It's just daily opening, the daily range play. So here's where, for you here that are familiar with some of our concepts, one question you may have is how do we justify going long the daily chart? Well, we can justify it because as a day trade, that time frame can be justified a couple different ways by calling it quote unquote climactic with your eyes squinted. But what's really the key here to this whole chart that put it on my list for this day, remember, I'm looking at a lot of stocks every night or morning, and to put it on my list, to put it on my hot list such that I'd be trading it early the next morning, it means I really like something, right? This was a trade for me. So again, except for a K-view, which as I said I didn't do, the rest of these are not just me after the fact blabbing about a chart that I found. These are trades I did. So you have to understand what I'm saying is 100% true. Yes, I like it, willing to throw money at it. I do like this, and the whole secret is this gap down this day. This is what you would actually call a true novice gap. The stock was actually kind of in free fall mode. The gap down ended the move down, and the next day the reaction to that big bar filling that gap there was just consolidating to hold. From here, that is a presumed daily uptrend, and pullbacks are buyable. So the next day, when they came down like that, I did not like the fact that the problem with this trade was there was no area to know where it's going to be. Now, tag, I would never want it down here. Never, never. You have to know the difference kind of between buying strength means you expect to hold a certain amount, and that's where you can get into a little bit of the retracement concepts and the thing. But basically speaking, this is strength, and I want this thing to hold. Any coffee, remember, we've been in a daily downtrend, and we're making a presumption that that gap down ended the bears, brought in the bulls. So I don't want to see any more bears in control. Does that make sense, Tag? So there's no way I'm interested in this on weakness. However, the next morning, that first pullback, where is it going to stop? I don't know. So what's the answer in this case? Well, you ignore this and you wait for the next entry. That happened to be the next entry. Now, in all fairness, I have to tell you, I'm always honest about this stuff. This was a great trade. It made 2 R's very quickly, right? But I did get sucked in early, and this is my second trade, and I lost some on the first trade. I think I got sucked in here because I did want this. But again, it kind of shows you in a sense, even though I lost in the first trade, and net, I made the whole day's goal on this, even including the loss. But it does, in a sense, it shows you, I think it's actually a good thing that I took the trade, because it shows you what confidence I had that this is going to happen from understanding this chart, right? Does that make sense? And I really want to emphasize this, that I don't come on ever. I mean, occasionally I make educational points about things, but I don't come on here with a weird chart like this and just pull something out of my butt and say, oh, yeah, look at this chart I found. Oh, you should have known to do this. I did this. And not only did I do this, but I actually tried it earlier because I liked it that much. So I took this little buy setup in here somewhere, and then I stopped out of it. But then I re-entered when we retested. We had that white bar here, retest, blah, 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 blah. Now, the run was great. The run was better than I expected. I thought I'd be sitting with it all day to get my money back, and I end up doubling my money in, what is that, an hour or something, whatever it was. By the way, this is, they're both a 5-minute charts, or I meant to put a 2-minute chart there, but it's not relevant. There's nothing to learn there. So you can see the entry, the time. Well, here I was in it for 1 hour and 8 minutes. That's what it took. I think the points here, one of the things I'm trying to get about like a sleeper chart like this is the whole point of tonight, is to say that a chart like this to me is a high odds trade. And I think a lot of people wouldn't look at it that way because they're looking at just simple concepts like, oh, the daily's in a downtrend. Well, I'm the first one to tell you, I don't want to go long a day trade with a daily in a downtrend, but there's a big exception here. There's a big asterisk. There's a big rule. And by the way, it's not a rule that I just make up as I go, right? As I always say, what I teach is what I do is what I teach. Eric or anybody, do we or do we not have an hour-long presentation in the home study in a PARD called Time Frame 2 Above that would absolutely justify this daily chart being long in great detail? Anybody who's listened to that? Yes, no, yes, no. Just the people here? Yep. So I'm not just making this stuff up on the fly. Thank you, Dale. This is stuff that all can be explained and understood, right? Well, yeah, you need to watch it at least a couple times because it's not always all that easy. But that's what's involved in some of this stuff. And, I don't think anybody ever asked me this, but I could see somebody asking the question. It's like, okay, Paul, you have all this stuff set up, and then we have this extra presentation talking for an hour about basically, in essence, this. Well, why? Why? Because that's how you learn to take this trade. It's kind of a sleeper trade. It's something the average person would know. But what's great about sleeper trades, I said on the opening slide, or maybe it's going to be on the closing slide, I forgot. But the great thing about the little sleeper patterns is that you're in first. And the rest of the world, as they catch on to what's happening, what are they doing? They're driving you to your target. Rather than you being somebody who's following the rest of the world and you're one of the last people in, and now you sit with it as it pulls back. This is, by the way, the birthplace. And that's, believe it or not, this is Campbell's soup of all things to be trading. I do trade boring stuff. But you talk about the birthplace of a move. Now, I didn't hold this long term, but what if I would have held this right here as a long-term position? This thing could rally. And when you go back and say after a 6-week run, you go back and say, gee, if I had the knowledge of God, where would I have gotten into this? Guess where it would have been? Right there. That is the birthplace of this move. That was a daily trade. And if I'm looking at the chart over right now, where it is today, it just had a blast off day today. So imagine having a long-term position that had a 18-cent stop, 19-cent stop, actually a 17-cent stop, because that's on the outside already. Now, naturally, you wouldn't hold that share size of the 17-cent stop, but nevertheless, ability to make money with entries like that far outweighs the risk of having an occasional stop out on something like that. Campbell's soup. Next one. How do we like QUBT short under the 5-minute base, which creates a 60-minute breakdown? So what we're talking about here is we're gonna break this blue line. So how do we like this? Let me put a 1 here. So in other words, we're gonna break below this 5-minute base, which is up in here, and that also leads to a break below the entire 60-minute chart. How do we like that as a short? Go ahead, go. The 60-minute breakdown play. I'm gonna give you guys like a full minute on this one. Looks nice. It's at the top of the daily range. Okay. All right. Well, ding, ding, ding. Tag pulled a seminar comment right out of the manual, and he's 100% correct. Yeah. And Eric, who is one step ahead of Tag, has the actual answer. This is a trick for you. No, that's not a breakdown. This is the qubit chart, which up here I told you, you cannot ever take that as a breakout, right? And likewise, everything long is everything short. It's all the same concepts. You can't possibly ever take that as a short. Never, never. As a matter of fact, this is a long. This is a perfect long. This is exactly what you want to see. You want your long on a wide base like this, you want your long to break the bottom. Why do you want your long to break the bottom? People say, oh, it shows strength if it stays above. Well, that's true sometimes, but you don't know. Why do you want it to break the bottom? I already gave you the answer when I talked about this. Why do you want it to break the bottom? To go long. Because the question is, are the bulls still buying this, or are the bears going to take over? And once you break that low, every bear that has a valid ID card to come in as a bear is going to come in and sell this. And guess what? Oops, Nobody's there. There's nobody that wants to sell this. Nobody. So that makes it a great long. And again, excuse me, this is not just a theoretical, oh gee, let me show them a chart and laugh at them. This is a trade I did. This is an absolute favorite trade for me. People ask me my favorite trades. This is one of my favorite trades right here. This is it. You belong at 935. And literally, and by the way, I liked it so much, I didn't wait for that. I got in here. That's the confidence that I have on some of these trades. Now, it turns out it pulled back and you could have got in here, or you could have taken all your profit here and reloaded, but you also don't know that's going to happen, right? It could have just gone. So I was in this at 935, 1153, 1128, blah, 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 and I took all my money on that run up. I just took it all. That's what it's called, the fast money in this case. I just took it all in the run up. It could have theoretically been held longer. It could have maybe even been held as a swing trade back to the top of the base, but I took it all in there. So that is, again, the ultimate sleeper, because a lot of people, now many of you knew it wasn't a short, but a lot of people will look at that as a short. They will short that when it goes below, quote unquote, below the base. And as Tad correctly said, for those of you that understand how I teach charts, you are never allowed to short. I don't care if it did drop, it doesn't matter. You will never ever see me short that below the base. I might short it at a different entry later, but you can't short it as it breaks the bottom of the base on a white base like that. That is not only the most unreliable thing in trading, but it's probably the most reliable thing that you go long when it doesn't fall. And that one, it didn't make, well, it made the day's goal, but I only held it for 20 minutes or whatever it was. Okay. One more chart and then some comments here. Now this is a long term. So we have a 60-minute chart, a daily chart, a weekly, and a monthly. It's a long-term position. And the question is, how do we like this quote-unquote daily breakout above that base right there? Monthly, it's somewhere in there. Be right in there. The weekly is blocked off up until the point of the trade. How do we like this? This is a long-term. Now, so this is something, again, we're holding for weeks, theoretically. This is the longer-term position off the weekly chart. How do we like that? That's a long play. Yeah, it is. And yes, you're right. I like this a lot, and it is in the category of what I call a screamer, because I think this is not a sleeper. This is not something that you need great knowledge to see or understand. It's a daily breakout play, and a couple of points I did want to make about it though is, where do you enter this? Well, I actually entered it before it broke out. This is a long-term position again. Here's the numbers for it, and this is from the long-term traders, not a day trade. I actually entered, you see that bar right there in the hourly chart, which is that daily bar right there. I actually entered in there for that day. And guess what? It turned out to be a good thing, because the next day, maybe you wouldn't have caught that. It gapped up and flew. So again, that's the confidence, if you will, to say that this chart is ready. Why am I sitting around waiting? Got in over well, it was basically kind of an extended hourly buy setup on that day. And then it hit target one already. Hit target one and boom. Got bought, attempted to fail again on dailies, got bought again, yeah. Well, all that explains what happened here, this is what you're talking about, is you came off, you had a beautiful, everything about this chart is like perfect. Even your monthly, support area, you see it here on the weekly, comes across. This is huge, the retest is huge, and all that happened here is you flew up to here, and that's this here, and you just flew up to this prior area. So it's just a very extended run into anything. So what should happen? What should normally happen in VRL is it should pull back, right? Right, JPT? Should get a pullback in there. But it was so strong, it refused to pull back. It just sat there and went sideways. And that's when you start getting really interested. And that's when it went on the hot list for me. And then that day was the right day to do it. So that's not a sleeper per se. That is just a screamer, meaning the whole world can see this, but it's a good screamer. Most of the screamers, to me, that the world looks at are not really good trades, and that's why so many people lose at trading. Two final thoughts here. I feel sleepers are usually the best setups. You are there first, here it is. Everyone else has to play catch up, and this drives you to targets. But how do you set up an automatic scan for these? How do you scan for sleepers? How do you, I know a lot of you like automatic scanning. Yeah. That's the thing, Eric, is scanning manually, and that's why I do. Now, I have some automatic scans that run. I don't use them a whole lot. There are some great scans you can do for certain purposes. Like Let me give you one of the simplest scans you can put into any kind of charting platform that really does a good job. And it's just simply, you want to find an uptrend, just put in price is greater than the 20 MA, greater than the 40 MA today, and then the same thing 30 bars back, and the same thing 60 bars back. And you will find 90% of those would be decent quality uptrends, just with that simple little formula. You can find uptrends. The problem is finding an uptrend is not finding a trade. An uptrend is not a trade. An uptrend is an uptrend. So you still have to go through the uptrend list. But if all you do, like if you're just a casual, kind of a lazy, laid back swing trader, weekly chart trader, you can just scan for these uptrends and, the automatic scan in front of you there, run it every day, take a look and see what they look like and see which ones you like on the pullbacks, whatever it is. But a lot of these things that I look for, how do you scan? Well, how do you even scan for qubit? You don't. I mean, that's kind of a day trade thing. But how do you scan for this? How do you scan for CPB? I mean, yeah, I know you could tell me how to write a scan to find CPB, but then you have to write a scan also for KView, and you have to write a scan for PL. And the point is, to catch all the things I want to catch, you need 72 scans, and you just end up with a whole universe of stocks on your hot list. So I know there are some advantages to running some scans, but the truth of it is, you want to really scan, you really need to do these manually, in my view, the way I teach people. I'd rather scan. If I had to prepare for the day, and listen to this comment because it probably drives it home. If I had to prepare for the day, I would rather take a list of 100 stocks and look at them manually than to have anyone on planet Earth scan 1,000 stocks by computer, even 2,000, even 3,000. I can find what I need for the day if I look at 100 stocks. I look at a lot more than that, but I could find what to do for the day or for the week. I mean, the higher you go up in time frame, the more things I want to look at, but I could find what I wanted to do for the day with 100 stocks easily. Give me 1,000 stocks scanned by computer, I'm probably going to have a pile of junk that the computer thinks is the right stuff, but it's not necessarily a trade. It's 8:57. I have time. I have 3 minutes for questions, then I'm shutting down this program whether you like it or not. Did you enjoy the first event of the year? Do you have any questions, comments? Let me know if you think it stunk, if you didn't get anything from it, if you liked it or not. And I didn't put a slide up here for it, but tomorrow we're coming right back with the intro class. Tomorrow at 7 is the intro class. You will get emails for it tonight, so I'm not going to worry about you missing it. But I'm sorry, tomorrow, what time is it tomorrow? It's at 5, right? It's 5 to 7. Tomorrow at 5 is the intro course. Everyone is invited to that. Even if you're not, if you're just a free member, you're going to be invited to the intro course. So come, if you've never been to it, you ought to come to it. If you've been to it once, come do it a second time, because like a lot of things, most people don't learn everything the first time around. It is a good course where you will learn a lot of things that promise you it'll be worth your time for a couple of hours, right? I know you do, Viral. And I owe you an email, I know. James, it's subjective and it's not subjective. You cannot scan for it. Well, you can with a more advanced scan, but because of the difference in volatility in stocks, you can't just simply say, oh, it's got to be less than 2%, 1%, whatever, because percentages don't work at all. Because some stocks 2% is off the chart, and some stocks 2%, it moves that every 5 minutes every day. So it's just a visual thing, James. Where you get your real ability to, how do I want to say this? If you're saying, is it subjective? The answer is yes, basically. If you wanted to make it objective, the way you do it is to make it subjective by saying, here's the chart, here's the movements that we have, look at the daily chart, and here's the range, right? So for an hourly chart, when you look at the size of bars, the size of average days, the daily chart, this is where, that daily, it's actually a daily chart range. So you're up and down this far. It's just a very wide thing. And there's other things that, you'll be learning about like in this in terms of the time. The exception is when you do treat it as a breakout, when it's actually a DTS breakout play, which would be a PTR. And then when that happens, you're not going to have the 20 doing this inside of here. It's going to be a much different look to it. So this is just a wide base. And yeah, it is mostly a subjective look that you have to do. There's no objective formulas that I really ever use in trading. When we talk about big volume, we don't, run a scan on the volume bar and look for something that's more than 50% above the average last 60 days. You just look at the volume bars and say, hey, there's a big volume bar. That's the same thing here. This is a wide base. And as you look at charts, you'll kind of get a feeling for, as you look at different charts, what wide and not wide is. Would we get email for that? For tomorrow? Yes, Carla. For tomorrow, you mean? For the intro class? You'll absolutely get an email, yes. You'll get it tonight sometime. You'll get a warm-up tonight, and you'll get your logins tomorrow. It'll be same place, same room, different password, 5 o'clock. All right. Hey, Bruce, how you doing? Well, all right. 6 o'clock on the button. If you're in the room, I'll see you in the morning. And otherwise, I'll see all of you tomorrow. Busy week at DTS for the intro course. All right. Have a good night, everybody.